This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Wednesday, September 3rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 3.5 at 419.5. November soybeans were also down 3.5 at 1037.5. And December Chicago wheat was down a penny and a quarter at 527. This morning we had an export sales announcement. 185,000 metric tons of meal to the Philippines, and that was for 25. Yesterday afternoon, we had crop conditions out. Corn dropped a couple of percentage points in the good to excellent category at 69%, still well above the 5-year average of 59%. Soybeans had a larger than expected drop, 65% in the good to excellent category, off 4 points from last week, and still above the average of 60%. And on the spring wheat side, we're 72% harvested. That's just slightly better than average, 71% there. So with that, good morning, guys. Not a whole lot in the way of fresh news here this morning. We've kind of been chopping around here. I guess, Dustin, maybe share a few thoughts, things that are on your mind here this morning, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, for a 4% drop in ratings, you'd think there'd be a little bit more of a bump in soybean prices overnight. But I think we're market's entirely focused on the poor demand, which maybe it's rightfully so on beans. We've just had a very slow start to the sales pace, falling crush margins recently. But I still would caution, how dry it's been in the last month. Starting to hear anecdotally from our growers in the East about growing concerns. A big portion of, Illinois, Indiana, Ohio, very little rain received over that last 30 days. So I'm not really holding my breath until we get in the field and see what it is. But, I would say this is not the best finish when we only have 80.9 million acres of beans planted this year. We've got pretty good RVO guidance. I think that this recent drop in the ratings is something to take notice of.
Yeah, Justin, we were talking a bit, before the show too, and I just, I kind of hate to see what's going on over in, China, Russia, North Korea, like these countries coming together, it doesn't seem like that's leading us down a path where you get some sort of a surprise trade deal or something. You know what I mean? It just, the rhetoric doesn't look good.
No, I mean, I think that's talked about a little bit, but I think, it's gotten worse since yesterday. I think that is the headwind for soybeans. It's such a big part of our demand that even though I think the market's probably onto the page that crops getting smaller, I think with, such a big portion of our demand is in a relatively tight window and we're losing it every day. And then the rhetoric, you've got China, Russia, North Korea standing with each other and military parades, Trump, tweeting about it. I think those relations look to be going the other way. So I think it's the biggest headwind right now for soybeans. At the same time, another comment I think I'd make is river levels continue to plummet. Mississippi really falling, and it looks to fall to another 5 feet or so with this just really dry finish that we've had in the East. So spreads have widened out. Basis levels have gotten tough, obviously, especially for soybeans, the further west you go. And now if you get river levels kind of getting really weak here in the East, I think spreads and basis could be at risk if the demand isn't, if it kind of falters here. So I think, on this flat price rally, for people that do have, a decent amount of bushels that have to move by harvest and don't have a home, I think you probably really need to be looking at stuff here. This is the kind of rally that you'd hope for, because if you look at, crop insurance levels, say you're an 80 or 85%, your effective floor, if you have a good crop, is quite a bit below here. An 80% policy, you're 50 cents below here on the board to have any kind of a floor in corn, for example, similar for beans. So I think you really got to look at this rally if you have to move stuff. I've a lot of reports we were talking about before the show about, we talked about this weeks ago about the market incentivizing people to store, right? So you're getting huge carries. We talked about bagging systems, and now, hearing shortages, the further west you go, trying to even get a bagging system. So I do think the incentive's there, and it's going to continue to push it until it finds a balance of how many bushels need to be stored versus unloaded at harvest. So I think the market's kind of trying to figure that out right now. You're paying pretty good interest rates. The market's paying good interest rates, I should say, the setup to store beans, especially. So the trend, as we talked about on the show a lot of times, has been to, sell a lot of beans at harvest, to free up some cash and then store corn, and I think the market's really incentivizing to store both. So be curious how that plays out, but those are things that concern me the most. I think I agree with Dustin completely. I think it's been a horrible finish actually for beans through a big chunk of the belt. Obviously we've got, rust, I think, is going to be TBD on what the extent of that damage is. I think it's obvious that there is damage. What levels, what yields are those coming from, and what's the result? We really haven't seen it, this kind of a outbreak, if you will. At least I haven't, in this many of the key growing areas. So it's beans to me is a complete, I think supply's going down and demand's going down. So it's a really tough one to trade. We got November beans at 1060. So you're within 20 cents of the highs for the year, so I think that's why we aren't falling apart, because of all the demand. If we didn't have weather concerns, beans would probably be closer to $9 with this kind of a setup, in my opinion, with China and the poor demand. So I do think the market's factoring that in. And if we could get some resolution with China or some brighter prospects, I think beans would be good. But right now it seems to be going the other way. And corn's strong demand. They announced more expansion in Brazil for ethanol usage. So I think the global corn demand story is pretty strong. It's just a matter of, in this window, we're going to have a big crop coming to market. River levels are low. So you got to be cautious in the next, I think, 60 days for corn too.
Ben, what's on your mind?
Markets are just less than dynamic, even though we've had a nice rally. And you look at this rally and you think, okay, is this the beginning of something? Is this a turn, or is this just a short covering bounce in a bear market? And I think that's a really difficult question to answer. We've been conditioned for failure. We still have a gap that's 12.5, 13 cents above here. And with river problems, fall harvest about ready to kick into gear here in a few weeks. I think they're going to make us wait a little while to find out what we have as far as the crop goes and how cagey the grower can be in keeping it off the market for now. Grain market's typically punctuated by a lot of quiet, slow time, followed with, maybe 3 or 4 weeks a year that are really volatile. And we haven't really seen that this year, with the exception, if you want to call January somewhat volatile. But just not anything that really gets to get too excited about just yet, in my opinion. So.
To that point too, Ben, just to add to that, I think you're kind of seeing, think about the production. You gained a couple million acres in corn, obviously a huge increase in yield on the last report. So as an end user, you felt pretty comfortable sitting on your hands and just being hand to mouth, right? Like, just like everybody else. And, farmers got no incentive to sell. So you kind of got this staring contest a little bit with, on this rally, you probably forced some end users to cover a little bit, just with some of the rust stories. You got some managed money to cover a little bit. The question is, okay, have they bought enough for now, or do they need to keep pushing it? and I do think it is kind of a little bit of a staring contest on both sides. I mean, for different reasons on the corn and bean market. So it's a really tough, this is a really tough spot to have a strong opinion, my view.
What were you saying, Jace? You got $1.25 under, kind of out in the far west. That usually
$1.50.
goes to the P&W. Yeah, $1.50.
Yeah, just the northwestern belt basis is horrible right now. So above yield expectations, above normal, and no demand right now anyway. So I think there's going to be a big divide between cash markets on the western belt and the eastern belt. I think we're going to be dealing with that all year, would be my opinion.
Thoughts on that, fellas? Justin?
Agree? Yeah, it's the western belt. If you look at South Dakota, all the record crops that are supposed to drag the national to a record are west. South Dakota, areas that aren't usually the ones that you're planning on pulling stuff up. You call it Iowa and West. And the P&Ws, usually soybeans going to China, and that's zero right now with a majority of the supply coming from that area. So it makes sense. It's very unfortunate, but it makes sense. I agree with Jason. It's going to be a tale of two cities after harvest. Good spot to be a soybean crusher, that's for sure. Or someone that feeds corn.
Futures should be more tied to the eastern belt. What do you think, with the delivery system along the river? I know the river...
futures and spreads for sure, because that's off the river delivery system. That's my concern with you've already got the problem in the west, and if you start getting low river levels, that can be kind of a pain too. So I think that's why you see future spreads so wide. You don't have enough demand right now to keep them tight. Corn's obviously got a great book of business on. We're doing good export inspections every week.
Mm-hmm.
So that's been pretty stout. Beans have been weak. Actually, wheat's been improving dramatically. So there's some positives, but if you start getting low river levels, that just kind of puts a kink in a lot of things.
Yeah, insult to injury.
It is.
Yeah. I would also add to that too, Jason, because there's really not a great function for domestic demand to source through the exchange, right? It's all geared to go downriver. So it's really about, in a way, exports. So I think that's why bean spreads are so wide to corn spreads. The other thing too is you mentioned the tale of two worlds. Like the last time I can really think of a very, very clear difference was 2015. We had a bear market year where Indiana suffered pretty sizable yield losses. And so it's like, how, this is way before these bigger policies were widely taken. And we had insurance claims for guys in Indiana on 85% policies. We had low prices, but we had really strong basis, and we had large ARC County payments. So it was kind of a saving grace as the market kind of still made its way through basis improvement and through ARC County payments and insurance payments. And granted, we didn't have the difference of cost of production in 2015 that we have today versus output, but it's interesting how that kind of makes up for loss of yield in some cases.
It is interesting, just to add to that, I'm curious, what, I know it's got a long time for this, but, let's say we stayed in a dramatic, war with China, or, whatever you want to call what we're in, trade war. And, they decided to skip buying US beans this year, and they were able to source everything from South America. Right. And we do rest of the world business, but it's just not enough to make up for it. Let's just, so you have these extremely low basis levels throughout the year. Doesn't PLC and some of those, marking your averages based off cash prices could be affected the other way. So you could see multiple kind of dislocations from these government programs and basis levels, in theory.
Yep.
And Justin, to ask a quick question on that point, is there a path for China to literally do that? In your mind, can they go?
Feels like they're trying to get as close as they can to that.
Yeah.
Here we're September. You got to assume they have September and a good chunk of October stuff bought from South America. I mean, that's the problem. South America's crops have gotten so big, and China has really kind of flatlined on demand. You know, maybe it's up a little here or there, but it's not nearly the growth that we saw, you know, the previous decade. You know, they've been making changes to their ration. I think we talked about a long time ago, but you know, they used to have a super hot ration, meaning a lot of meal, you know, high percentage of meal in their ration. They've gone down more to like what the U.S. ration is, so less meal, more corn. So they've made changes to be less reliant on imported beans in general, and obviously pumped in tens of billions of dollars into South American infrastructure. So, I mean, this has been planned, in my opinion. So I think they're going to get as close as they can to it. You know, that's why, you know, I've been a huge advocate of, as a lot of people have, on really boosting domestic use. You know, that's why I'm hopeful that, you know, some of these small refinery waivers, exemptions, you know, get thrown out, and we find a way to boost, you know, especially when you're seeing military parades, you know, with Russia, China, North Korea, you know, writing might be on the wall that you got to figure out something else here.
Yeah. Well, it's good to see USDA crush came back and, you know, another 6% above last year. So we're still on a good pace there from crushing.
It's going to be good, but right, you've got to be 25% above last year to offset China.
Yeah, good point.
You know, so
very good. Real quick here, let's chat with Ryland. Two-sided choppy start to the week for cattle, but I'll tell you what, hogs are starting to truck. So what do you got?
Yeah, absolutely. Just kind of a flat trade yesterday. You know, there was a little bit of concern just with beef prices kind of slipping yesterday. Choice was down almost $2, select down 383. So we're past kind of peak seasonal demand time, and there's just a lot of fear, I think, overall. So it's been a couple of days. We haven't made a new contract high in October live cattle. So something's got to be wrong, right? Or at least something's changing. I mean, and we did see a little bit of weakness on the weekly averages for cash. Live steer prices were down, you know, 65 cents. Dressed was down 52. So I think we've got a situation where we're in this kind of vulnerable seasonal time frame. Plus, anybody that's looking to buy feeders right now is kind of, you know, taking a pretty large leap of faith right now that everything's going to stay, you know, pretty good for the next year. And even though I think you baked a lot of that sentiment in the market, I mean, the border's still closed. I mean, the cattle just aren't there. Like, how much is factored in right now? Should we be much higher? I mean, all these questions are circulating right now, and I think it's kind of culminating to a little bit more fear and concern just longer term for the market in general. So we'll see how it kind of shapes up this week. Right now, we haven't had any cash market indications at this point, but like I said, just something feels a little bit different. Maybe it's a shortened week, maybe it's coming past grilling season, but these are usually the time frames, September, October, you know, when we do see a little bit of change in ownership here. So everybody's going to be paying pretty close attention to the open interest. Open interest was back up another 2,000 contracts on the live side, but it was starting to fade. We have seen a little bit of liquidation out of the feeder market from the specs, so that was down a little bit here too. So like I said, it just feels like you got a little bit more concern, I think, this week than we've seen in weeks previous. So I think that's what we're going to be trading. On the hog side, another massive high, you know, new contract highs in the back end of the market. And it just kind of feels like the supply situation is still relatively tight from what it looks like. And we're starting to see the momentum trade just really pick up. We just haven't seen any real liquidation or anything along those lines. And at this point, cash markets have stayed really firm. We got cash at 106. It was up $1.50 yesterday, and carcass was down just slightly. So, I mean, I think generally speaking, we typically see that shift where carcass and cash start to gravitate lower, but you've already baked a lot of that in on the board here, and we played quite a bit of catch up. So that difference between cash and where futures are right now, I think, is the big question mark. And I think we've corrected, you know, at this point. So I think producers are going to be a little bit more apt to start looking to get some hedges on here.
Very good. Appreciate the update there. Just came into the open here. We got December corn down 1 3/4 now. 421.5 is the last. November soybeans are down 2 at 10.39. And December Chicago wheat's up 1.25 at 529.5. One thing to note, weekly export sales would be pushed back to Friday due to Monday's holiday there. So no sales tomorrow. We'll have those on Friday. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.